Traders, welcome back to another price action trading lesson. In this video, we're going to talk about price action rules and how we can use these rules to help us identify high probability setups. The structure of the market today started with a very strong bearish spike down. You can see CPI data came out, news announcement, and when I see such a massive spike down, generally I don't jump straight in. I like to wait for a while, be patient. I want to see market to calm down so I can understand what is the pattern, because market can be a little bit distorted. The price action is hard to navigate. So right now we have consolidation. We traded up into this consolidation and we expect new high following trendline rule. This is a new low, first entry short pullback, second entry short failure. So we expect new high, but the signal bar is bearish doji. I cannot go long above this bar, and I cannot use the follow-up bar because there's a massive tail at the top. So this is a bad bar again. So great context, bad signal bar. We have a break and move to a new extreme. I don't really like fading just yet because we traded up into this consolidation, so there's a big chance we're going to continue working higher, but most breakouts will fail out of trading ranges according to rules. So if you shorted here, it still worked way beyond the scalp, so good setup, but I believe it is better to be a little bit more patient, and we keep creating another higher high. So if I'm going to take a look back to understand what is the bias in this market based on the candlesticks alone, there is slight bullish bias. You can see every single major low and high is higher in this market. So this is uptrend. How strong is this uptrend? This is very, very weak uptrend because it resembles a trend range slightly tilted up. Strong pullbacks. So I know that I have to be more careful respecting corrections. And as a price action trader, since I understand there's possible weak uptrend, I need to locate a channel. So you have two options. Number one, you can select these first two swings. And the channel fits pretty good, nicely off the highs. There's so much empty room at the bottom. The channel feels a little bit too flat. We retrace too much lower here. So I chose the second option today. I chose a channel like this, make it a little bit steeper, copy it, put it at the top, and we still want to see if this channel is going to get confirmed. Okay, so this is the idea that you have to do as a price action trader. This is your thinking process. You're looking for key entry points because there's a reason to price movement and you want to understand what will happen in the market. We already have a first break, move to a new extreme. This is perfect. This is good for bulls because we already have a break in new extreme. Now I cannot really go long just yet because we're below EMA. We're still not fully at this key level, so let's see what's going to happen. Let's be patient. And now we have variation of a triple test. One bounce, second bounce, third bounce. Bearish trend is depleting and our channel is getting confirmed more and more. You can see the bulls are stepping into the market, but look at my signal bar. Tail at the top. If there is a better bar here, you can consider going long, but with such a bad signal bar till the top, I think we need to see high low above EMA confirmation setup. That didn't form, but this is great time for bulls. Our key entry point held, it is confirmed, so we understand what is the structure. And right now we know we are trading weak uptrend. So what we have to do, we have to be careful buying at the top of the push phase. We want to see deep pullback and then buy low or wait for push above EMA and buy high probability setup above EMA. We have a new high for the entry long, second entry long. I cannot go long because the signal bar is bearish. We're far from the EMA, so I cannot go long just yet. And of course, this is a weak uptrend. You can see still pretty much resembling a trend range, just slightly tilted up. That's how you know you're trading a weak uptrend. We have a break, move to a new extreme, and our channel is also coming into play again. Okay, big signal bar. We have a push above EMA, and now we have a high-low confirmation setup. And you can see the channel is holding again. Downtrend played out with the break, move to a new extreme, and this is first decent high probability setup, high-low confirmation setup. You can see correction phase ended and a brand new push phase will begin. Now what I have to be careful now is we have a new high for a central long, second entry long. What do you think? Is this a good second entry long to take? No, we are not pattern traders only. There's a massive gap between the body and the EMA. And this was weak uptrend. Now it's slowly transforming into medium one because the corrections are smaller, but you still cannot go long at the top of the move. This is not a very strong uptrend where you have to buy any pullback. Massive gap here. You can see EML tail trap and you're buying at the top of the move. So I need to see some double trap or high low. Now I can sort of reset the count here. New high, first entry long, second entry long, fell breakout. So this can be viewed as a fell breakout mini second entry long, but the signal bar is quite bad. Bearish doji. very close to being a great setup, because now we correct a bit more. We're buying much lower. We're at the EMA, but the single bar is sketchy, and the double bar entry is actually decent. You can consider double bar entry for this failed breakout millisecond entry long. So, this is okay setup to take. I'm going to mark it slightly more aggressive just because the initial signal bar didn't form the clean. But double bar entry, you need to wait for a trigger about this bar, and market continues to go higher. Quick scalp. Now market is going sideways. We have a new high. We don't have first entry long just now, first entry long, but we can see important price level is holding. Buyers, they're not letting go of this important price level. And here we have a second entry long, but problem is, look at the congestion here. You're basically buying the breakout out of the congestion. Now, it's most likely going to work because this is multiple test. This is a strong key level. So this is a second entry long. So you understand that the prices are going to go higher because we are still part of the main uptrend. This price level is holding, so key entry point is formed, but it is so stacked. You need to see some high-low breakout pullback, or if you're going to go long here, you need a very deep limit order, which didn't happen because market continued to go straight up like this. Okay, market is correcting another second entry long far from the EMA, which we cannot take because it is not fully at the EMA, and market is bouncing off the trend channel line. So right now, once again, I'm going to zoom back so it makes sense what is happening. You can see this is where we're going to go long. Smart buyers are buying at the bottom of the correction phase, and they're taking profits once the prices reach the other side of the trend channel line. That's how price action works, and we can expect stronger pullback, but I would still think bullish here because the uptrend is still in play. Okay, we don't have no setup at the EMA. Market is completely reversing down, and in fact, at first I had my channel tied like this. Notice what is happening. We keep working lower so strong. You cannot definitely go long now. This is so bearish. This is extremely strong pullback. There can be easily case made for the wider downtrend. You need definitely some push above EMA when the correction is this strong and deep. Visually looks like one leg, not broad two legs. So just be patient. No push above EMA. And at this point, I have to adapt. I have to widen the channel, something like this. Okay, we have a break, move to a new extreme, another push to a new extreme. So I'm going to mark break a new extreme. Now, normally I would expect new high for this uptrend, but this downtrend was so deep, so long and strong. We never truly pushed above EMA. This can reverse the market because the trend was already weak to begin with. And weak channels, once there is a stronger pullback, you may not get new high. Okay, if I want to go long, which at this point I'm still expecting new high, I need to see some proven push above EMA and a second entry long. So let's see what's going to happen. Okay, market keeps just chopping here, breaking new high. It looked hopeful, but it instantly reversed all the way back down. So we have a break, new extreme here, and we're back below EMA. This is important. Once you see this break below EMA and you see two-legged pullback that played out, this means there is no bullish bias left, and we are safe to be looking to go short. Now we have a lower high confirmation setup that is confirming visual two-legged pullback. There is actually a spike in a channel pattern, but it is quite hard to trust it when you're watching this real time because it can easily be just a break, two bigger legs to a new extreme. But if you're playing this spike in a channel and you're leaning more bearish, you can consider taking this lower high because it is right below EMA. Uptrend played out, and this spike in the channel needs to get new extreme. However, I didn't take it because I had my break move to a new extreme, and I was a little bit more patient here. So now there is no wider channel just yet, so I cannot really go short, but at the same time I cannot go long. So I'm just gonna be patient, wait. Remember, we are not pattern traders. You need to understand the context and to understand where the key entry point is. So I'm just gonna be patient. You can see massive congestion. You cannot take any setup. We have a two-legged pullback and price action is breaking lower, and this is actually very similar to what happened right here. First leg, break second leg, first leg, break second leg, and because we push below EMA now and this is a failed breakout, this is where I look back and I started to trust this wider downtrend more. Now normally you prefer wider channels like this when you have early two swings, let's say new high, like a second swing here that allows you to draw a wider channel. Generally, the wider channel is not going to form when the second swing is so far down. For this reason, you got to be a little bit careful to jump straight to conclusions to apply this channel. But once you have two-legged pullback up, uptrend played out, you're back below EMA, you have to ask yourself, why bulls cannot break it all the way above EMA? So this channel is now getting confirmed with a third confirmation. Let's see what's going to happen. And you have a lower high, actually a new low for a entry short, second entry short. Had this second entry short fully closed below EMA, this would have been a great high probability setup. But look at the tail closing above EMA. In this situation, we need to get a failed second entry long because the tail is horrible at the bottom. You know, bad signal bar. It's a shame because great context that it closed more bearish because it is confirming also the failed breakout. And once again, market moves in pairs of twos. Can you get a failed second entry long? We cannot because new low was made. We broke, exceeded the latest lowest low. So it's too late. The push phase already happened. Micro double bottom count reset. Redrawing the trend line. First entry short. We have a second entry short, but we are above EMA. So I can't really sell just yet. I want to see push below EMA to confirm that the sellers are in the market and want to get the new low. Okay, lower high above EMA. I still cannot go short just yet. We're above EMA. Also, there's a case to be made for slightly wider channels. So every single time you can make slightly wider uptrend, you gotta be a little bit careful. No push below EMA, so I'm just waiting. Okay, and market is suddenly trending lower, horrible signal bar, and the new low was created. So I'm gonna mark my new extreme, and at the same time I'm gonna mark my new highs every single time, like this. So downtrend played out with a break, move to a new extreme. We cannot redraw any wider channel because at this point this would be simply too broad and incorrect. So there's a break, move to a new extreme. You don't have these key levels just yet. So what you're gonna do, you're gonna observe the price action. There is no setup here. You cannot buy at the bottom here. You're in the middle of nowhere. The key entry points are not established. Market keeps trending all the way up. So what I'm gonna do, I'm gonna redraw a brand new uptrend working high like this. So what I want to see now, we have confirmed uptrend working high. So I want to see two-legged pullback at the EMA. Okay, I want to see two-legged pullback at the EMA because this is a very nice and clean confirmed uptrend. No two-legged pullback. We already have a small break. Move to a new extreme. Okay, so that's a bummer because these are very nice setups when you can get a clean two-legged pullback when the base is clear. Uptrend needs to get new extreme. And just as quickly market rallied up higher after new high, market is trending in the opposite direction. There's only first entry short. You need to get a second entry short. There was no second entry short, so I can't really sell just yet. And market is trending all the way down here. At this point, this is where you have to understand what structure you're trading. Zoom out, flat EMA, move down, move up, move down, and now you can draw these key levels. You're gonna select the low, the high, and you don't have to be perfect because once you get more price action, more confirmations, you can tweak these channels. And also what can help you, follow the trend line rule, because once you see break in your extreme, that's where you can expect the pivot. But this is a trend range, so you want to apply trend range rules, okay? You want to be careful selling at the bottom, buying at the top, so you want to buy low, sell high. And if you get strong trends within this trend range, you definitely focus on two-legged pullbacks at the key entry point. So this is pretty much what you're focusing on. But we can see, unfortunately, no two-legged pullbacks, even though these moves are quite sharp. Okay, market is breaking lower. Our double bottom is starting to hold. Okay, this is interesting setup right here. We have a new low, first entry short pullback, second entry short failure. So it's a high-low confirmation setup. Now you have broad two-legged pullback, but that's not that big of a problem because at the bottom of the trend range, a lot of sellers are going to get trapped. Notice this massive bearish bar. You can picture how many sellers are going to get trapped here, selling into bottom of the trend range after all possible downtrends played out. You cannot draw any bigger downtrend like this. There's so much empty room here. You're trading a trend range, which means you're not drawing wider channels, and this is incorrect. Okay, this is not subjective. There is objective rule how to draw these channels. In trend ranges, we draw them tighter, and you need confirmation. There's so much empty room, so you can imagine so many sellers are going short here. So this is why this high low is actually powerful. You're coming off to lows, and this is decent high probability setup. But once you get this second entry long, new high, first entry long, second entry long, and you still haven't exceeded this high, you can definitely go long here because What is price action telling you? EMA keeps holding, the buyers are stepping into the market, and the market is now going to reverse because in trading ranges, smart traders will buy at the bottom, they will take profits, and they will sell at the top. So market keeps trending higher like this. I'm going to redraw short-term uptrend, connecting first few swings here, and we have massive overshoot. So right now I have to expect stronger pullback. Second entry long I cannot take, inside bar after overshoot. Let me zoom in a little bit closer. Far from the EMA, sideways congestion and no setup here. Okay, back below EMA cannot go long. It is too choppy, too sideways, no trade zone. Overshoot can generate stronger pullback. I'm still expecting new high, but there is no good setup, and this is important. Why are we not getting moved to new extreme? Why are we pushing all the way back down? This right here is the move that tells you, okay, I need to pause looking to sell because we didn't reach a new high and there can be stronger pullbacks. I'm respecting this stronger pullback. You can see how the bullish bias is starting to dissipate. Bulls are trying to create new high and they're failing hard. And this bullish trend is losing control over this market more and more. You have a break, move to a new extreme. I don't think we can fade the breakout just yet because, you know, this is not particularly healthy consolidation. This was caused by the overshoot. This is just market cycle shift. Two-legged pullback down. Yes, you know, it worked, but, and I don't think we can take high low right into EMA like this. We're far from the key level. This is just no man's land. We're in the middle of the main trend range, so we gotta be careful. I don't think we can take second entry short because downtrend played out with the break and move to a new extreme. I'm just waiting. Market pushed back above EMA, so I'm going to redraw automatically a brand new option working higher. Only first entry long, breaking new high again. So this is pretty much what we do. We just follow these short-term channels and wait for a good opportunity to be presented. Wait for everything to align. Market is trending low. This is actually a decent lower high. It happened quite quickly, but once the structure is consolidating like this, you can definitely anticipate that the market is right now going to go lower. So this is a decent lower high. Market is working lower. We have a second entry short. We expect new low for the downtrend, but the signal bar is way too big. New low for essential second entry short. Downtrend is new extreme, but the risk on this bar is too big. Also, you don't have much room before reaching these lows. So we needed this bar to be at least half its size so we can sell a bit higher. So you have room to scalp out. So we can really sell here. And now notice, break, move to new extreme, and we have high-low confirmation setup. New high for central and second entry long. And I'm going to zoom out and you can see this is repeat pattern what happened right here. Break new low, bearish depletion, sideways action. The buyers are stepping into the market. Push above EMA is telling you, okay, the bulls are changing the course over the market. There's going to be bullish momentum happening, and this is high-low confirmation setup, repeat pattern of this, because in trend ranges you expect depletion right here of sellers and the market to reverse and go all the way to the top. You can't take failed second entry short because you're so far from the EMA. You needed to see pullback closer, so I'm expecting a second entry long. That didn't form. Okay, second entry long far from the EMA. Still, I cannot take. But this is pretty much simple. I just expect the two-legged pullback at the EMA. This is very clean. One leg working higher. Can we get a pullback to the EMA? No pullback to the EMA again. And this is quite rare. So many steep channels without two-legged pullback to the EMA. You have two-legged pullback here. Second entry long. New high first entry long. Second entry long. So you can see these buyers are always buying the two-legged pullback. But just because it worked here once, next time you may get burned on these. So a little bit more aggressive. Can we get a failed second entry long? No failed second entry long. Market instantly reverse. So once again, perfect trend line rule. Excuse me, perfect trend range rule. You cannot argue with this. Second entry short. Once again, far from the EMA, I cannot take. Respect these. And you can see how important it is to wait for prices to correct to the EMA. This is why I'm not marking these setups. You cannot cherry pick. You have to have strict rules because it worked here, but here it fell to the downside. So you have to be patient, respect the correction phase to the key entry point to the EMA. Market is reversing all the way up. Okay, I'm just going to adapt. Draw the uptrend working higher. Second entry long below EMA I cannot take because it is below EMA. I need to see EMA holding. And now we have high-low confirmation setup of the second entry long. Uptrend is new high. Great signal bar. closing above EMA, we need to get new extreme, new high was created, and market reversed, and now it's getting pretty much way too late. And once again, trailing range highs are holding. A lot of price action today. You can see so many bars. Now there are a lot more setups that you can consider. I can make a case for a few more aggressive setups, because if you're a more advanced trader, you can definitely find and pick a couple more aggressive setups that are here. If you're a more advanced trader, they are not considered as aggressive. And you can see this uptrend to get new high, but it is not super uncommon because the uptrend was already weak to begin with, so the correction was too strong and market reversed. I hope you had a good trading day. I'm gonna wrap it up. I'm gonna talk to you next time. Good luck with your trading.